Hi everyone, I'm Rusty Dunn. I'm here with Caterpillar Chief Financial Officer Andrew Bonfield, here to talk about the financial results for the first quarter 2025. Andrew, good to see you as always. Welcome.
Great to see you too, Rusty.
Well, set the stage for us. Tell us the story and some context behind the numbers this quarter. What did you see in the results?
We delivered another strong quarter. Our results continue to reflect the benefit of the diversity of our end markets and the disciplined execution of our strategy for long-term profitable growth.
So walk us through some of the specifics. What were the performance highlights as you saw them in the first quarter?
Overall, sales and revenues were $14.2 billion. That was down 10%, actually broadly in line with our expectations when excluding the negative impact from currency. We delivered adjusted operating profit and adjusted operating profit margins above our expectations. Profit per share was $4.20 and adjusted profit per share of $4.25, excluding restructuring costs. Business activity and our customer financial health remains resilient. Balance sheet and liquidity positions are very strong.
The follow-up to that, Andrew, as you see it, what drove sales in the first quarter? What insights can you gather from the data?
Yes, overall, obviously, we saw lower volume. Lower volume was driven mainly by the changes in dealer inventory. Last year, in 2024, we saw a big build of dealer inventory. This year, we saw a very much smaller build in dealer inventory, so that drove the volume difference. We also saw negative price realization in construction industries. That actually, though, drove better sales to users as the benefit of our merchandising program started to come through. We also saw continued strength within energy and transportation, and particularly in power generation, and that was driven by recip engines for data centers and solar as well. We also saw strong order rates for the quarter. Our backlog grew by $5 billion. This is the largest organic growth we've ever seen in a quarter, and it now stands at a record of $35 billion.
From a business segment perspective, a couple of highlights from that.
Construction sales were down 19%. That was mostly due to the dealer inventory that I mentioned a moment ago. Profit was down 42%. Resource industry sales were down 10%, mostly due to lower sales volume. Profit was down 18%. Energy and transportation was much stronger. Sales down only 2%, some of that due to the impact of currency. And profit actually increased by 1%, showing growing margins and profitability to $1.3 billion.
And let's talk about cash generated and how it was deployed.
Yes, overall, we actually saw free cash flow of about $200 million. That's lower than the previous year, mostly driven by lower profit. We deployed $4.3 billion to shareholders through a mixture of share buybacks and also dividends. We continue to return substantially all free cash flow to shareholders through a mixture of dividends and share repurchases. And our balance sheet remains strong. We have ample liquidity with $3.6 billion of cash and another $1.2 billion in slightly longer dated liquid marketable securities.
And Andrew, still early in the year, but tell me about your thoughts ahead and what we could expect.
Yeah, so obviously we moved into a period of greater economic uncertainty, and there's also potentially some cost headwinds coming through from tariffs. Obviously the situation is very uncertain, very fluid, and may change. If we looked at our sales forecast for the quarter, we would have actually, had not been for tariffs, we would have actually raised our guidance to have sales to be about flat for the year versus slightly down. And we've also run scenarios where there is some economic dislocation, which would mean that sales would be slightly down for the year. Our business is in very good position. Our backlog is strong. Our customers are in very strong financial health, and that gives us confidence that we can overcome those challenges.
Let's stay with the bigger picture for just a second, Andrew, in terms of our strategy to navigate the current macro environment.
Yes. So obviously it's a fluid, as we say, and it's dynamic, and it's obviously changing. So therefore what we have to do is manage things between the short term and the longer term. Short term, we've taken some actions that we can to mitigate the cost of tariffs. Obviously, in the event that those tariffs become permanent, we will obviously have to take more action. It's a bit more challenging because obviously our supply chain is very established and it's not something we can just change quickly and overnight. So there's some things that we've got to do, but we've been around for 100 years. We've managed these situations. We're a global company. We have a global supply chain, and we are very resilient.
Well, let's shift and talk about some of our products. You had the opportunity to recently visit the Peterborough facility and learn more about some of the engines there, and a lot going on.
Yeah, it is. And it's great to see a very high volume engine facility because it's our smaller engines from 2.8 litres right through to the 7.1 litre. And it was a great visit.
Well, let's watch.
Hello everyone, and welcome to another Beyond the Numbers. I'm joined today by David Goldspink, who is our VP of Industrial Power Systems and our General Manager for the UK business. David, great to see you and great to be here. Perhaps you can tell me what we do here in the UK at Caterpillar.
Andrew, yeah, thank you very much for spending the day with us. We have 18 facilities in the UK, 13 of them are actually manufacturing facilities, and today we're in Peterborough, which is the largest facility in the UK.
And Peterborough is actually mostly where you produce both Cat engines and Perkins engines, is that correct?
We do, yes, yeah. It's really good that we could have a significant tour this morning and show you. But we're producing Cat and Perkins engines in the range of 2.2 litres up to 7.1 litre.
Yeah, and you also have research and development facilities on site.
Yeah, as well as the assembly, test and finish and machining facilities that we have at Peterborough, we're also home for the European Research and Development Centre. And in that centre we have over 500 engineers, and we're very much working on the future. So in the future in our industry is making the very best diesel engines, but also internal combustion engines that are going to be burning alternative fuels going forward, and also working with hybrid systems and pure electric. So we're working right across the Caterpillar matrix in helping the development of all those technologies.
And that was the interesting thing for me, which is actually seeing the integration across the segments. And obviously you're bringing different segments across Caterpillar together. So it's not just production of engines and IPSD, but also actually bringing the different segments around, particularly around new technologies and research.
Yeah, we spoke about this many times, but the secret sauce, if you like, really is the degree of integration that we can have across Caterpillar with all the expertise that we have, either at the end good level or all the subsystems, to really make sure our customers get the very, very best when they purchase a Caterpillar product.
Yeah, and your newest engines here are your 2.8 and 3.6 litre engines.
Yes.
Perhaps you can tell me a little bit about how they correlate to the machines behind it.
Yeah, so I mean, to start with, we have the new compact wheel loader, backhoe loader, and the brand new telehandler, all of which have been taking the 2.8 and 3.6 litre products. We've got a very, very good engine, very, very good machine, superb collaboration, and we really are giving the customer something very, very special.
Yeah, and that customer-backed viewpoint, plus also that integration of engineering technologies, bringing solutions to customers to actually help them be more productive. Which
Absolutely,
is really
yeah, and not just at the first sale, but all the way through the life of the product as well.
Yeah, and that's actually helping them to be more efficient and more successful, which helps us be more successful as a company.
Absolutely.
David, I really appreciate your time today. Thank you very much. Great visit around the facility. Great to meet the team. Thank you very much for your time again.
Thank you for your time. Thank you.
Thank you.
I love what David said there. We're all working for the future, and that sums it up.
Yes, it is, and it's great to see some of the work they're doing, particularly around things like electrification as well. So, this is a great facility, a great team down there, and some really interesting activities going on.
Andrew, good to see you again as always.
Good to see you, Rusty.
And thanks to all of you for watching. Have a great day.